from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Caroline Hyde, in for Emily Chang, and this is Bloomberg Technology. Coming up in the next hour, media moguls, billionaires, and some of the biggest names from tech, media, business, and finance and sports. Well, they're converging in Sun Valley this week. We'll get the latest from the ground. Plus, one of the most famous apps in the world is TikTok. It is under pressure with a challenge of its own as the FCC commissioner pressures big tech to delete it from its app stores. We speak with him live in a moment. And companies last year defied the pandemic to go public at a record pace. Now inflation and recession fears have caught up and brought the listing party to a bit of a halt. We speak with the NASDAQ Chief Commercial Officer, Jeff Thomas, on what to expect for the second half. Get to all of that in but a moment. First, let's get a look at the markets. Kriti Gupta in the house, and tech stocks did pretty well.
Yeah, they made a complete turnaround, Caroline. It's fascinating when you see this because if you had looked at the market at 9:30 a.m. this morning, this is not what the markets looked like. You did not see green on the screen. You had an almost 2% decline in those opening bells. A lot of that driven by that stronger dollar story that we saw. But you kind of saw a turnaround story in about, I want to say, halfway through the session. A lot of it driven by big tech, so much to the point that you can actually see that the S&P 500 closed up only 0.2%. The NASDAQ, though, outperforming in a very big way, up 1.7% on the day. But take a look at these yields, because I bet some of the yield picture is playing into it as well. Down only 6 basis points, well, 7, I should say, 7 basis points. And I'm saying only 7 basis points, Caroline, because in the last couple of days and weeks, we've had 11, 12, even 20 basis point moves in just one day. So it's almost a muted day for bonds, but perhaps lifting the stock market just a little bit, especially those tech stocks that we know are extremely ultra rate sensitive, which brings me to the high beta stocks in particular. Let's talk about ARK, the ARK Innovation ETF. We know that's a trade that has not been working this year, but today it actually performed well. And that's because the likes of Tesla, Microsoft, Google, all the big tech things have been taking a beating. They did really well today. But look, is it enough to have a turnaround story for the likes of ARK Innovation? It doesn't seem so, at least on this one-day basis, just given the kind of blood that we've seen in this particular market. So that's something that we're going to have to keep an eye on. And let's get to actually the next slide, which I should mention. It's not just a small tech that's bounced, because you saw that in cryptocurrencies, you saw that in biotech as well, but big tech really led the charge. I want to emphasize this as much as I can, Caroline, because take a look at this. These are your biggest movers on the day, but also your biggest index contributors on the day, your Amazons, your Apples, your Microsofts, your Tesla. Do we see this again tomorrow? How much of this is a technical trade? Caroline, I don't have those answers for you, but I'm curious to see if this is a sustainable move.
Aren't we all? Kriti, thank you so much. A great roundup. Meanwhile, Tesla, one of the names Kriti just mentioned, actually higher. That's even after a disappointing quarter of deliveries and record month of production. Now, factories in both China and Germany will remain idle for several weeks. Joining us on the phone to discuss all of this, Bloomberg's Dana Hull, who covers the company. Dana, we've sort of had mixed messages from Elon Musk about the cash burn that's going on. And indeed, they didn't seem to paint the picture that they'd be closing down some of their manufacturing units for some sort of break.
Yeah, there have been a couple of different reports out of China and Germany that the plants are going to be offline for a couple of weeks this month. You know, the half glass empty would say, oh, God, this is what a terrible time to be offline, right? They just came off of this sort of bad quarter where production was paused because of COVID. Now they're, you know, shutting down production again. The glass half full would say, well, this is all build back better. You know, auto companies typically take plants offline, especially around the July 4th holiday here in the U.S., to kind of do retooling, to do equipment maintenance, and you can often get better production after you've had an opportunity to kind of do that. So we'll just have to wait and see what production is like going forward. The company did say that they had a really strong production for June.
Yeah, what was it? 254,695 deliveries for June, which was the most that they've ever made in history. But it actually was still less than the market wanted.
Well, that was actually 254 was the deliveries for the quarter, which was a dip from the first quarter. But the market kind of expected that because we knew that China, which is their most productive factory, had been offline for several weeks because of the COVID lockdown. But yeah, no, it's definitely a mixed bag. I mean, I think there's going to be a lot of questions about production and the ramp up of the new factories in Austin and Berlin when the company reports earnings July 20th.
Yeah, Berlin, Austin losing billions of dollars right now because there's a ton of expense and hardly any output. Musk seemed to be telling Tesla owners back on May 31st. Is he painting in general a gloomier picture or an upbeat one? What do you think?
Well, I mean, I think he's always been fairly, to his credit, I think he's always been fairly frank about the state of the economy as a whole. And this is a man who is now the longest running auto industry CEO. I mean, he's been the CEO of Tesla since 2008. He steered the company through the first recession, or the most recent recession in 2008, 2009. The company came very close to bankruptcy during the Model 3 ramp in 2018. And it is this dance of like, you're investing all of this money into getting new production capacity online, but until they're actually producing cars and you're delivering the cars, you're not really making that much money. So I think he's actually gotten fairly good at kind of managing cash and figuring out which levers to pull. Demand does not seem to be a problem, at least at the moment. And Tesla has raised prices quite a bit to kind of cover the costs of higher energy costs and higher commodity costs.
And let's face it, making a lot more EVs than anyone else out there, Dana. Lastly, just the mood music around Shanghai in general, because again, we were worrying about further lockdowns coming from those cities as the zero COVID policy seems very much still in effect. How much are we worried about the longer term bet that Tesla has made?
I mean, I think that, Tesla's footprint in China is so important to the company, and it's also just very important to China. I can't see that they are going to, let that plant, fall by the wayside. I mean, people were living in the plant, in the closed loop system for as long as they possibly could. So, the geopolitical questions about China vis-a-vis the U.S. are always really interesting ones. But no, it's a very strategic plant for the company for sure.
Dana Hull, we always love her on to talk all things Tesla. We thank you indeed. Meanwhile, Elon Musk is actually meant to be out in Sun Valley, as are media moguls, billionaires, some of the biggest names in tech, media, business, in finance, in sports, and, our own notable attribute, which is Ed Ludlow, is on the ground there too, along with Sonali Basak. And Ed, talk to us about what's going on the ground. Who have you seen? What have you managed to dig out already?
So Bob Iger, former Disney CEO, of course, now upstairs, has just walked past me, and I said to him, Bob, what's top of mind for you? And he said, Ed, I'm retired. Having a good time in the sun is top of mind for me. But you do get people that come and talk about the industry, right? And one of those was Warner Discovery CEO, David Zaslav, and he actually basically set the scene of what's being discussed there. Have a listen.
I think it's going to be a great week. A lot of turmoil in the business, but that means, I think, a lot of opportunity. And Warner Brothers Discovery's got great quality content. So I think the world has changed, and it's not about how much, it's about how good.
The world's changed, Caro, but the vibe is very similar here this year to last year. Really heavy COVID restrictions in place for attendees. But there's a lot that they're discussing that's big picture, and of course the backdrop that they're all competing each other in a highly competitive streaming space, while the consumer is suffering with inflation and fears of a recession.
Overall, I mean, remember last time you were looking at the relationships, for example, the fact that whether indeed Mark Zuckerberg was indeed chatting to Sheryl Sandberg. There's been a lot of change at the top since you were last there.
Yeah, and those same awkward moments are expected to happen, right? I talked about Bob Iger. Well, Bob Chapek from Disney, the current CEO, is here as well. There have been rumors that their relationship is under stress. You have Elon Musk due to come here, along with the Twitter CEO, Parag Agrawal, and CFO, Ned Siegel. Of course, they're going to talk about the Twitter deal. And even if they aren't, when they're walking through the corridors to brunch, or they're out on their mountain bike having an adventure, or they're fly fishing, whatever it is, obviously that deal is going to be discussed here because it's the one that everyone in this media landscape is talking about. Just
remind us what everyone there is actually meant to be doing, apart from fly fishing. Is it about relationship building? Is it about sharing knowledge? What is actually the overall impact of a Sun Valley?
Yeah, so Sun Valley is hosted by Allen & Co. And Allen & Co. is a boutique investment bank that's advised on some of the biggest deals in history, right? You look at their name and where the deals they've been involved in this past year. They are advisors on the Twitter deal, right? They have been involved in the Microsoft Activision deal. The idea is that they bring together all of these people, principally from telecoms, media, and tech, but you see other people. Mary Barra from GM is due to be here, And, the hope, let's not beat around the bush. The hope is that this is a place where future deals are born. The idea is discussed. And, what's thrown in this year is that the world is changing, as I've said. Markets are incredibly volatile. Central banks around the world are fighting sort of seemingly untamable inflation. And they do have, behind closed doors, these kind of big picture discussions with a number of speakers basically giving their worldview. That's kind of what the premium access is. You get to get the thoughts of the creme de la creme of Wall Street, company executives, big thinkers.
Ed, big thinking for us. We thank you. Bloomberg's Ed Ludlow out there on the ground. Plenty more from him and Shonali coming up, but coming up almost imminently is the TikTok focus. Remains under pressure. We're going to be speaking with the FCC Commissioner Brendan Carr on why he wants Apple and Google to remove the app entirely. This is Bloomberg. In the US, TikTok has been installed over 320 million times. And now our next guest is calling on Apple and Google to remove that app from their app stores, calling it a sophisticated surveillance tool. Joining us now is FCC Commissioner Brendan Carr. Commissioner, thank you for joining us. And overall, why would you want it removed from the app stores? What power do you think that would have?
Well, look, TikTok certainly isn't what it appears to be on the surface. It's not just another app for sharing funny videos or memes. That's just the sheep's clothing. It really does operate as a sophisticated surveillance tool. It's pulling all sorts of information from web browsing to biometrics like face print and voice prints to location information, in some circumstances, draft messages. So that's a national security concern. But I also think it comes into play with Google and Apple's policies, to your question, because there's been new revelations, particularly the last couple of weeks, that more data has been flowing back to Beijing than previously reported. And data flows are very important in terms of how the app stores allow applications to continue to be on those platforms. And so I've said, take a look at your app policies. And if these data flows are inconsistent with the representations that TikTok has been making, and it seems to be that way to me, that they could boot them from the App Store.
You were referencing the recent BuzzFeed piece, of course, that looked at ByteDance saying it repeatedly accessed private information on US users despite company assurances to the contrary. What data are you assessing to ensure that this is factually correct, and indeed some of the other accusations that you have prior to that?
Yeah, so the BuzzFeed news story has internal communications from TikTok and ByteDance officials, including ones that say everything can be seen in China. And also TikTok itself sent a letter to a number of senators on Friday that for the first time indicated, again, a lot of information going back to Beijing. So it's some of their missions themselves, some of those information there that was shared in the BuzzFeed article. And the administration, through CFIUS, an agency group out of Treasury, is also taking a look at some of this. And I would encourage that CFIUS process to move swiftly in light of these new revelations.
Indeed, overall, the company, TikTok, has said China-based employees can access user US data, subject to a series, though, of robust cybersecurity controls and authorization approval protocols overseen by a US-based security team. The CEO has come out saying, look, I'm be very willing to engage with lawmakers, and indeed what he said is set the record straight, according to a spokesperson. Have you reached out to TikTok, to the leadership there? Have they been able to set you straight, or at least have a conversation?
I've not been set straight by TikTok just yet, but I'm happy to meet with TikTok officials and engage directly with them on this. I mean, again, there's two sort of main functions here. One has been for years, they were asked directly by government officials, are officials in Beijing accessing private US user data? And every time, instead of saying yes, but it's not a problem for these reasons, they would say, well, all US data is stored in the US. And now we find out that there's apparently a tremendous amount of information that was flowing back to Beijing. And as those new protections are going to be putting in place, I'm not so sure about that. Again, that BuzzFeed news article had a TikTok official saying that at the end of the day, these are tools built by China, and we'll see if they can continue to get access even after those controls are put in place. So frankly, this comes down to a matter of trust. And when there's been apparent misrepresentation about how much data is being pulled, where it's going for years now, I don't have a lot of trust left in TikTok. And I'm not alone. There was a member of the Australian Parliament that just wrote a letter saying, I see your US user data is going to Beijing. I want to know, is Australia user data going there? So I think this is part of a broader effort to take a look with more scrutiny at the data flows in TikTok.
You're one of the 3 FCC commissioners who were appointed under the Trump administration. Of course, under the Trump administration, we saw, well, bans floated of TikTok. But in general, it's not what users want. And do you see any sort of middle ground here, and any assurances that the company could make, or some sort of ability to maintain and use here in the US, but ensure that you're not worried about information flows?
I'm open-minded, although obviously I'm skeptical. I think step one has to be, let's get a full airing of the information that did flow before we talk about blessing through some sort of process additional data flows going forward. And you're right, I'm one of 4 FCC commissioners. We can only take official action as a body through a vote of the 4 of us. And so we'll see what happens here. But again, I think there's other agencies that hopefully are going to be stepping in as well with these concerns.
Have you heard back from Alphabet, the parent company of Google, and of course Apple, about any moves they'd make on their app stores?
I haven't. I've asked for a response by July 8th, and there's precedent for those app stores when data has flowed, for instance, to servers in China without that being disclosed, to kick that app out when there's other surreptitious uses of data for them to take action. So I'm open for them to tell me, here's why it's a violation of our policies, or here's why it's not a violation of our policies. But the national security question is pretty clear. I mean, U.S. military branches have almost all banned TikTok from their devices. Agencies that deal with national security have banned them from their devices as well. We've warned families of U.S. troops not to put it on their personal devices either. So there's a lot of concern about the national security threats.
FCC Commissioner Brendan Carr, we thank you. Come back when you perhaps heard back from the companies, and indeed let us know if you do manage to speak to some of those TikTok executives as well. We thank you. Coming up, why Broadcom's giant $61 billion deal for VMware now closer to becoming a reality. That's next. This is Bloomberg. Let's talk about deals. Broadcom's $61 billion deal for VMware. Well, it's going to move forward after a rival bidder failed to emerge to break up the deal for the cloud computing company during its so-called Go Shop period. That's according to people familiar with the matter. Now, the expiration of the Go Shop gets Broadcom past at least one hurdle to the biggest ever takeover by a semiconductor maker. Representatives for VMware and Broadcom can immediately be reached for comment. The UK will force owners of apps such as social media and search engines to curb, quote, state-linked disinformation. Now, if they don't, they face fines of as much as 10% of annual global sales. The crackdown is part of the forthcoming online safety bill. Meanwhile, the EU, it wants to increase the number of tech startups in Europe. It's doing this through the EU Listings Act, which is saying will make it easier for founders to keep control of a firm once it goes public, as well as raising some 45 billion in euros. The EU has far fewer deep tech firms than the US and China, and the goal is to attract more tech and even have them, well, relocate to Europe, as well as invest in women and diverse founders. FTX US, the crypto exchange co-founded by billionaire Sam Bankman-Fried, signed an agreement with BlockFi that includes an option to purchase the crypto lender for as much as $240 million. Now, Bankman-Fried spoke exclusively with Bloomberg's Shonali Basak on Friday.
There are synergies between the businesses. I think, if you look at what BlockFi has built out, I think they have a loyal customer base. I think, they have a real business model. They have a card program that people love. They have a strong, they have strong leadership. And I think that we have been focusing on a lot of the back-end infrastructure, right? On, everything from the exchange, the matching engine, risk engine, and everything else. And those match up somewhat nicely. And so I think that there are a lot of ways that our products can work together and can mesh together in a way that's sort of better than, either would be independently. And I will also say that, they've been working really productively with regulators on, building out regulated yield products and licensed yield products, which we're excited about and excited that they've been doing it in a regulated way. I think that's a healthy way to do it, and I think that's going to serve them well, long term. And it's something that, we're excited to work with as well.
You had told Politico that FTX is looking for opportunities to bail out, places where customers would otherwise be underwater. But are you worried here about moral hazard at all? That bailing out a company may not actually be what's best for the industry at large?
It's a good question. And, and I'm guessing what you're getting at there is like, does that bail out a company that really should have failed and teach sort of the wrong lesson to that company? And I think what I would say there's two things. First of all, I'm way more excited to bail out customers than shareholders, right? And so the focus of this is not how do we deliver as much shareholder value to troubled assets as possible, right? It's how do we protect customers? And I think those imply pretty different things. So that's one thing that I'll say. And I think that one of them is way more important for the ecosystem, and the other is the one that has the biggest moral hazard. The other thing is that we are trying to find who were the responsible players who were building out, a good business, had a sustainable model, and could use short-term liquidity, and that could help protect customer funds, built a real valuable business that I think had something real to offer to customers, rather than which companies honestly should never have existed, probably. And as of today, maybe we should just let them sort of die a quiet death. I do think that's something that we have been thinking about.
Coming up, we're going to speak to the NASDAQ Chief Commercial Officer, Jeff Thomas, on the abrupt halt of companies going public and whether it will pick up in the second half. Stay tuned for it. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York. Now, last year, companies defied the pandemic to go public at a record pace. Now, market volatility, inflation, recession fears, you name it, it's kind of brought an abrupt end to that listing party. What next? Jeff Thomas is here to tell us, NASDAQ's Chief Commercial Officer, joining us now. Jeff, is the party over?
Well, if you look at the first half, we had 108 new listings. So while that's a dramatic fall off from last year, if you go back historically, that was actually a pretty good number of new listings for us. And by the way, that's compared to 12 on the New York Stock Exchange. So we had about an 88% win rate in the first half. What really fell off a cliff was the capital raise. So we only saw $12 billion raised in the first half of last year. And so that was a fraction of what we saw last year and what we see in a typical year. So still seeing a number of new listings, but not a lot of big listings.
At one point, it was very much felt like a SPAC party in 2020, 2021. Is that gone, the special purpose acquisition companies?
So of the 108 IPOs we had in the first half, 59 were SPAC IPOs. And so you did still see new sponsors coming to market. There has been a slowdown in that market compared to what we saw last year, based on kind of the market reception on some of the recent SPAC business combinations, as well as some proposed new rules from the SEC. However, we did also see 31 SPAC business combinations get completed in the first half of this year. So it's still a viable way for companies to come to market, but definitely under a little bit more scrutiny.
Certainly, and we've heard sort of theorized the likes of Instacart, the likes of Discord, who've made it known that they want to go public. How are they now assessing the market? What does the backlog look like?
I think there's an enormous backlog of companies that we've been working with, since some of which last year, right? So if a company went on file confidentially in December of 2021, it typically takes 2 to 3 months to work through the SEC comment process. By the time they got to the end of that process, they were really not going to go into the market as choppy as it was in Q2. So I think everybody's looking for a little bit more stability in the market. They want to see the volatility index or the VIX come back down below 25 or 20 even. And they want to see some of the macro uncertainty get flushed out of the market in terms of what's the Fed doing on rate hikes, the entire geopolitical situation. So we're hopeful we're going to see some big deals start to come back to market after Labor Day, but it's still a bit uncertain.
Talk to us about, therefore, how private companies can help their employee base by having some sort of secondary offering, or how we can have liquidity events for these businesses, many of which have got talent that they need to keep incentivized. I know that you were president of Liquidity Solutions before. You talked about, when you're in the private market, how you can have these sorts of events. What are people looking at?
That's right. So NASDAQ private market is still a very viable alternative as long as the private capital markets hold up. We still see a lot of capital available in the private markets, although we are starting to see valuations come down in the private markets to follow along with the public markets. And so whether companies are going to do a tender offer out to give a broad-based liquidity for their employees, whether they want to run an auction to do some price discovery and see what's the true value of their common stock now, or just do one-off block sales for some of the founders and early execs, NASDAQ private market has a great platform to help companies achieve that liquidity while they're waiting a little bit longer for the IPO.
How many of those companies actually want to lock in those sorts of new valuations, though? Because some of them are eye-watering when we're looking at the reports about Klarna, for example.
Well, I think, if you look at it, there's a lot of companies on the public side whose valuations have been compressed. And so it makes sense that companies on the private side would see a similar compression, especially those in a similar sector. And so one of the things we track really closely is the price to earnings multiple in the public markets relative to the 10-year interest rate. And there's a pretty clear trend over time that as that 10-year interest rate goes up, PE multiples come down because those future cash flows, or lack thereof, are a little bit less valuable in a high interest rate environment.
Who are some of the pools of money who are still willing to commit to this private market at the moment, or indeed to new recent IPOs? We've heard of certain institutions looking to actually help bridge that gap when companies are unable to raise new funding rounds or indeed go to the public markets.
That's right. I think a lot of folks will look to step in. The question a lot of companies are asking about is, should I raise that new round at equity where I have to price the round, or is it better to do some type of a convertible debt security where I can bridge the round without having to price that? Part of this is the psychology of the founders and CEOs out there. They just raised a round of funding last year. They probably announced that very proudly to their employees. And now they're probably reticent to go out and announce a new lower round valuation, even though that's probably where the market would clear. So that trade-off between debt and equity is something we hear a lot of companies talking about.
And what about where companies are coming from? Are they all US domestic based? Of course, there used to be that time where lots of Chinese based companies wanted to list in the US. Has that sort of fallen afoul as well?
Well, we definitely have seen some headwinds in terms of recruiting international listings, along with a lot of the geopolitical uncertainty. There's been a lot of nationalism in the search for new listings. So while things have slowed down a bit with the Chinese listings, while we've been working through some of the accounting issues that the SEC is working with their regulators on, we have seen an increase in demand from companies in Southeast Asia, Latin America, and other emerging markets. So for US investors, we think it's critical that we keep attracting these high growth companies from emerging markets to the US capital markets. So we're hard at work on that.
And what about the innovation on your side? What more are you looking to do at the moment in terms of ensuring that they keep on coming to NASDAQ? As you say, you've got a big win rate. How are you looking to ensure you're busy if indeed the pool of companies wanting to come to market is a little bit smaller?
Well, we always like to say we have solutions for companies at every stage of their life cycle. So we talked a little bit about how NASDAQ private market can help with liquidity pre-IPO. Once you're a public company, an issue that's getting more and more important is what are you doing around your ESG disclosures? The SEC has proposed some rules around climate disclosure. So we're actively working with our issuers to advocate on their behalf with the SEC to make sure that those new regulations are reasonable. And at the same time, we're looking into what are the commercially viable options for us to help our companies with these new reporting requirements from regulators, investors, and all of their stakeholders. So we recently completed the acquisition of Metrio, an ESG KPI reporting platform that's going to help companies accelerate the way that they report their non-financial metrics.
And let's just talk a little bit. When you think of ESG, I immediately started to think of the moves that NASDAQ was making, ensuring that, well, the S was uplifted as well, not just environmental, but thinking about diversity on boards and who you have on and listing. How is that conversation going? How much are investors, sort of, to be blunt, caring about that at the moment?
Well, I think one of the hallmarks of a great market is to have great corporate governance standards, and that's why we did introduce a new disclosure rule around board diversity. We think it's a critical part for investors to be informed about the diversity of companies' boards. And so we've seen a great response from that in terms of both companies and investors. And as you mentioned on the S, there is a lot of work that's going into, especially around human capital management within the issuers and how they're thinking about their employee base, especially during this challenging time.
Jeff, it's great to catch up with you. Thank you for spending your time. Jeff Thomas, Senior VP at NASDAQ. Coming up, after the overturning of Roe versus Wade, we're going to discuss with the CEO of Women Labs how crypto is looking to support women during this difficult time. This is Bloomberg. Let's talk about crypto for a cause now, because in the world of cryptocurrencies, actually fundraising events have been forming around all types of causes. Now, with the overturn of Roe versus Wade, digital assets are being looked to potentially aid women around the country with some of the costs that they might have traveling outside of state, for example. Lisa Merklein is with us, CEO of Women Labs, and I'm really pleased to have some time with you. Just talk to us a little bit about what Women Labs is looking to do in terms of, well, forming some sort of DAO, of course, around supporting from a decentralized autonomous organization, funding women to be able to still access abortions.
Yeah, so I think one of the really interesting things we've started to see as a surge in the world of NFTs and crypto as a lever for social activism. So people are now going to crypto, they're going to NFTs as a way to donate money in order to support causes like Planned Parenthood. My organization runs an NFT project called Crypto Chicks. And we were actually all the way back in January, we were the first crypto donation ever to IPPF, which is the parent organization of Planned Parenthood. So I think we're starting to see NFTs as a fundraising measure, but I believe we'll also start to see one step further than that, where decentralized autonomous organizations, which are basically self-governed entities, will start to create this network nationwide of people that live in safe states where women can get an abortion in a safe clinic legally, and people that live in states where they, in the past couple of weeks, woke up in the morning and realized that if they need access to an abortion or safe reproductive health care, they no longer can legally do that in their state. And a DAO can provide the mechanism to not only just connect women, but to be able to sponsor emergency trips to states where women can get access to safe healthcare. So the really interesting thing with this is that for people who are upset about what just happened with overturning Roe v. Wade, now there's an opportunity to really get involved in a mobilized, action-driven way, instead of just getting out into the streets and protesting, which we've seen over the past few years with various different human rights causes, doesn't always have as much of an impact as we would love to see in actually driving change. So I think this is a really great way to actually mobilize people who are passionate about how can I wake up in the morning and actually do something that has a difference in this cause.
Do you think it brings new people to the world of cryptocurrencies?
I think it does. I think there was this kind of misconception in a lot of people's minds still about the fact that crypto is associated with the deep dark web, right? And now we are seeing that, yes, it is actually creating this underground network, but it's an underground network for good, where you're able to connect people from all around the world to drive together towards something that is fundamentally what we believe in, driving human rights. So I think it is bringing new people in.
What is also a misconception is that crypto is in some way anonymous, because the blockchain makes it evidently clear that it's not anonymous. So how do you work that? How do you ensure that you're protecting the women who are actually using the funds to ensure that they are legally protected in some way?
Yeah, so I would strongly advise anyone who is getting involved or the recipient of any of these types of funds to use your crypto in a self-hosted wallet. So that means that you own the keys to your wallet using a cold wallet like Ledger or any of those other providers, and not using and storing platforms that you might be more traditionally familiar with, like Coinbase. There's news recently that came out that Coinbase might be selling geo-tracking data to the government, and we're waiting to hear on a Freedom of Information Act exactly the extent of that information that's being shared. But I would just caution people to realize that when you are using a centralized body as a platform for sending crypto, they are tracking your information. So if you're using something that purely lives on the blockchain that you manage and host and store yourself, then you can maintain that anonymity that you are looking for in a situation like this where you're worried about potentially being tracked by the government.
And of course, we'll look to get some sort of reaction from Coinbase and other more centralized entities on that fact. But Alyssa, I'm interested in your perspective more broadly on when we're at a time of great volatility. I mean, I look at, of course, Crypto Chicks, what you've provided, and a lot of it is NFT projects. Of course, NFTs have lost an awful lot of their value and indeed an awful lot of their minting. And I'm interested as to whether that makes people less willing. I would think at the height of the crypto craze, money was raised like within a click of your thumbs around, buying the Constitution, for example. How quickly are you able to raise funds in this more difficult environment?
We saw incredible excitement from the market. I think there's a lot of people in the crypto industry and even outside of the crypto industry that were just outraged with the news that came to light in the past couple of weeks, and people who are thinking about this as an opportunity to really be a part of driving change in history. And so we had people just outpouring support from our community, but from the broader community as well. And there's a few other projects that are doing similar fundraising measures to raise to be able to donate back to organizations like Planned Parenthood. And the whole market has been rallying in support behind these initiatives, which has been very heartwarming to see, as you said, even in light of the fact that there's a bear market happening right now in the crypto world.
Do you think DAOs in general will be used more prominently going forward for charitable endeavors? Need not be about fundraising for something such as this, but just a more accountable way of raising funds for no matter what way?
Absolutely. There's complete transparency with how the funds are used, and every person that is donating and participating within the ecosystem gets a say in how the funds are then distributed. And so for every individual person to feel like they are a partial owner of what's being created and then what's being distributed, I think that's a lot more action oriented. And from a personal impact perspective, a lot of people feel like they're actually really driving change and being a part of that. And so having that sense of closeness towards the results of what you're putting your funds towards does really help to get people a little bit more involved. So I think there will be plenty more initiatives that come out of the world of DAOs that are charitable or social impact oriented in nature.
Out of interest, have you looked for celebrity endorsement in any way of these funds going towards helping abortions in some way? I felt like NFTs got very much caught up in the world of celebrity and kind of has backfired somewhat as everyone's taken off their NFTs from their Twitter handles and the like.
We are connected with a few very high profile women who are excited to be involved with what we're building. And we feel like that's been really helpful for us because as a lot of women are kind of scared of the world of crypto, seeing familiar faces that you respect and know are really high profile individuals in the mass media world, having those people be a part of the ecosystem and a part of the community helps to normalize it a little bit. And so I think the people that have really been interested in crypto and NFTs still are. They're still active advocates, and we are connected with quite a few of those that we are excited to be sharing soon. Have you
kind of changed your narrative though a little bit as to, you say people who are slightly scared of the world of crypto? How do you ensure that people are doing this with the financial literacy that you want to ensure that they have, that they could lose an awful lot of money when putting it to work in an investment perspective? I'm not saying that your fundraising is in any way that related, but for example, in more of your older NFT projects.
Yeah, so I think it's really important to educate specifically women who, as we know from public stock market data, are a little bit more risk averse in their investments. Educating on what is the impact? Are you investing in something that you view as a short-term ROI? Or are you thinking about this from a long-term investment horizon? And really encouraging people to do a significant amount of research before they invest in anything, with the assumption that yes, there may be a downturn in the market right now, but as you look across the whole tech market in terms of risk assets and stocks, everything is down. And so if we are encouraging people to spend this time doing a lot of research and understanding what do they view being around and being a really strong driving factor in the NFT or crypto industry 1 year from now or 2 years from now. And if people want to then invest, they invest with a lot more conviction, having had the time and energy invested in educating themselves. And we, of course, as a community, put a lot of effort into making sure that women across the gamut of Web3 are well educated on what are all the different terms, what are the ways that you can invest, what are the ways that you can get involved in the industry beyond just being a collector or an investor, but also being an entrepreneur or project builder as well.
Women Lab CEO, Alyssa McClellan, thank you so much for spending some time talking about some of your latest focus. Meanwhile, coming up, a Bloomberg scoop, details on how Washington wants to curb Beijing's plan to become a world leader in chip production. This is Bloomberg. Now to a Bloomberg scoop. The US is pushing the Netherlands to ban ASML from selling chip-making gear to China. This is according to people familiar with the matter. Joining us now is Bloomberg's Eric Martin, who helped break that very story. So this is at a time where we look at potentially the US reducing some tariffs on China, but still looking to ensure that some of the technology isn't going their direction.
That's absolutely right, Caroline. This is something that we've seen both the Trump administration and now the Biden administration united in terms of trying to stop China's advance, China looking to catch up and surpass the US in terms of high technology. And one of the choke points in their bid to do so is this lithography equipment, this equipment for printing computer chips. And what we understand is that US officials have been pressuring the Netherlands and ASML to stop providing China with this equipment. China produces very little of its own equipment for this process. And so this is really an area where if China can't get access to it through ASML, which provides about 95% of this equipment, has a 95% market share globally, it really could put the brakes on their ability to catch up with the US on printing not even just the most high-tech kinds of computer chips, but even kind of more mature or older computer chips as well.
Do you think ASML will do it? Do you think the Netherlands will agree?
Well, that's something that we understand that they have not yet agreed to what the U.S. has been asking for. But this is certainly a place where the Biden administration has been looking to build consensus with allies. We understand that a similar request has been made of Japan and Nikon in terms of the one other major company. They have about a very small percentage, very small minority of that market, the part that ASML does not have. But this has been an area where the Biden administration has been working with allies globally to try to align export controls to make sure that something that China can't get from one country to prevent them from getting it from another.
Eric Martin, it's a great scoop. We thank you for bringing it, a truly global perspective coming from the chip industry, and indeed as we continue to keep abreast of what Washington is doing in terms of those tariffs on Chinese goods. Meanwhile, well, that does it for this edition of Bloomberg Technology. We'll kick off our coverage from Sun Valley beginning Wednesday with a number of great guests, including 23andMe CEO, SoFi CEO, Eventbrite's CEO. We've got a few there for you, indeed chairmans too. Don't forget to check out our new podcast as well. You can find it on the terminal as well as online on Apple, Spotify, and iHeart. From New York, this is Bloomberg.